Hey, Bulls and Bears, how we doing? Back with another dose of economic reality. It is November 1st, 2022. Welcome to November, the last 2 months of the year, and I think they're going to be very, very interesting. So let's get into it. So we're right around the corner from the Fed meeting, and most people, most economists, and myself included, are expecting a 0.75% increase to the Fed funds rate. Now, anything else would be definitely a mover of markets. So a bigger increase, a full percentage point increase, a 1% increase, that would be negative to the markets. I think we're going to see a big sell-off if that happens. Something less than that, a 0.5% increase, that's going to show a deceleration or a lessening compared to the previous increases. So that's going to be bullish because markets are forward looking. As soon as there's a hint of a slowdown in the rate of rate hikes or the amount of rate hikes, then you're going to see, I think, a massive bull run in these markets. Now, considering the economy is completely manipulated by the money creation, by the maneuvering of interest rates, most people, investors included, are trying to figure out what the Fed's going to do, what type of increase is it going to be to the Fed funds rate, what are they going to say? Are they going to give hints of future loosening of the monetary policy? If they do, that's going to be bullish. You guys know that this is all manipulated. It's all controlled by a very few small group of people, right? So we kind of have to sit back and listen and watch what's being done, what's being said. All right. Unfortunately, that's what this has come down to. It's really sad, that this is the economy, but we also have to look at a lot of different things like debt levels. That's going to affect the decisions of the policymakers. And that's why it's so interesting and critical right now to pay attention to this, because we have record levels of debt right now. This is way worse than the financial crisis levels of debt as far as the average person, the middle class. Most Americans are in the most debt they've ever been in today. And we're talking about all different kinds of debt, right? So higher interest rates combined with that, not good. That's why a lot of people are predicting something that's going to break and a pivot happening very soon. I did a report a few weeks ago about a December Fed pivot, that something's going to break between now and then. And in my last report, we talked about how Kiyosaki had predicted something to break also by the end of the year, before the end of the year. And they were predicting Kiyosaki was predicting a dollar crash basically before the end of the year. I don't think that's going to happen. Anything's possible. That's why I always say be prepared. And there's nothing wrong with being ahead of the game, being ahead of the curve, being prepared. And if you're prepared and nothing happens, well, that's fine. You're prepared. And but if you're prepared and something does happen, you're going to be really, really happy about that and thankful that you were prepared. So here's what's happening. We've got a group of lawmakers out there right now going at the Fed, criticizing the Fed, saying you're raising rates too fast, you're hurting the middle class, because they know all the debt that people are in. I'm not going to get into the names of the lawmakers because it doesn't really matter, because no matter who's in power, there's always going to be this push to enhance the economic collusion, to keep to enhance the collusion. There's always going to be this push to enhance the economic illusion. And the people in power, of course, they don't want the economy coming down on their watch. They don't want rates being raised on their watch. So we have a group of several lawmakers right now out there saying, quote, "You continue to double down on your commitment to act aggressively with interest rate hikes and keep at it until it's done. Your overreaching focus on using the Fed's tools to bring down inflation, no matter what the cost, is particularly troubling given the limits of interest rate hikes addressing key drivers of today's inflation, including lingering supply chain snarls, corporate price gouging." They're talking about the oil companies, other corporations, and the war. All right, so they're trying to put out the reasons why the Fed needs to quit raising rates, and ultimately they want rates to be cut. Why? Because that's going to give the illusion of an economic boom. It's going to make it easier for people to borrow money. Of course, we all know this. Low interest rates make the economy look better, plain and simple. But when you have inflation in the background, which is also crushing the middle class, they're between a rock and a hard place. You all know this. So we have lawmakers out there pushing for the Fed to cut rates, basically. All right. So what's going to happen at tomorrow's meeting? Well, it's going to be a 0.75% increase. That's what I think. I don't think they want to throw any surprises at the market right now. We'll see how it goes. All right, but let's get into some other news here. Now, a topic that we've covered here pretty thoroughly is how when the economy is failing and when debt is high and when the cost of living is high, crime also increases. And we're seeing that now. Now, I used to notice maybe once a week, once every 2 weeks, driving my kid to school here in my neck of the woods here in San Diego, I would see glass on the side of the road where cars would be parked at on the side of the road. There's a lot of street parking here in San Diego because, well, a lot of reasons, but a lot of people get roommates because the cost of living is so high. So it's not uncommon to see a house with 3, 4, 5 cars parked there, and a lot of street parking because of that. Also, you have a lot of apartments, and a lot of people have to park on the streets because apartments have limited parking. Most of you know that. But when you see glass on the side of the road, that indicates it was probably a vehicle break-in, and somebody broke the window to break in to steal some stuff. If you see glass in the middle of an intersection, that of course that means that there was likely an accident there. But no, this is on the side of the road where cars park. And I used to see that once, maybe every 1 week or every 2 weeks, see some glass on the side of the road. Today, I saw 3 different areas where there was glass on the side of the road, and I've been noticing this more. And it wasn't just today. I think a few weeks ago I noticed a couple other areas that had glass on the side of the road, and it's becoming more common now. So that tells me that crime is rising. There's more vehicle break-ins. I look at the news, there's more vehicle break-ins. People are getting more desperate. The cost of living is crushing people. And the jobs that are out there, you see so many help wanted signs. Why are people not taking the jobs? Because they know that they're not going to make enough of these jobs to keep up with the rising cost of living, to keep up with this this bubble level housing. Look at housing, rents. This is unprecedented and unsustainable. And people now are choosing, I think, to do side hustles instead of taking a regular job. And people may be doing it legally, hopefully legally, but people are doing a lot of things to avoid to have to take a minimum wage job, right? So that's why we continue to see help wanted signs. People are working in the gig economy, hoping to make more than they would by just taking a job at your local fast food restaurant. That's what I think is happening, and I think that's why we still see a lot of help wanted signs out there. But yes, crime is increasing. I've got a story here about the thefts from vehicles and the catalytic converters. There was a bust in Arizona. Somebody had over 500 catalytic converters, and they get actually metals out of these catalytic converters, so they're very valuable. And now people that are parking on the street, you're in jeopardy because you've got the break-ins where people are just going to break your windows and try to see what you have in the car. Of course, don't leave anything in plain sight where someone's going to see that and want to break in. Don't leave anything that looks like a wallet or a purse. That's not going to prevent it, but it can definitely reduce your chances of getting a break-in. Catalytic converters, you can install a shield. It's going to make it less. It's going to make it more difficult for people to get under there. And the story that I read here was that it's taking 60 seconds or less. Gone in 60 seconds. Remember that movie? Well, catalytic converters are being taken for less, taken in less than 60 seconds. They've got jacks, the kind of they use in a pit on a race. What's that called? The pit crew. I'm not a race fan. What do they call that on the side of the racing? Was it a pit crew, right? They're using these high-speed jacks and power tools to get under there and cut off the catalytic converters, right? So that's what I'm seeing here. A lot more glass on the side of the road, more tents, more homelessness, shopping carts now just on the street randomly filled with bottles and stuff. It's definitely noticeable. What are you seeing in your neck of the woods? More crime, more glass on the side of the roads, more homelessness. That's what I'm seeing, and it's just going to continue until the cost of living comes down. All right, now let's talk about what's happening with the 10-year bond. Why do we look at the 10-year bond? Because that's going to tell us what's going to happen with mortgage rates. When the bond yield rises, mortgage rates rise along with that. We know the Fed's been coming in. They've been keeping this bond yield suppressed. Even though we've seen a big increase, we see these instances where there's a huge drop-off in this bond yield. And last night, the bond yield, the 10-year bond yield plunged from, it was up to about 4.06, 4.07. It plunged down to about 3.92. That's a big drop. We know the Fed's coming in and they're still purchasing bonds. They're shedding their balance sheet. The balance sheet is declining. So overall, it's still a rising rate environment, but we're definitely seeing some suppression. Imagine where rates would be if the Fed took a hands-off approach here, because who's going to buy a bond that's yielding 4% over 10 years? You want to be stuck in something for 10 years to get 4% return a year, not even matching inflation? No real investor is going to do that. So it's only the Fed buying this. If it weren't for the Fed, we would see an enormous spike in rates, an enormous spike. So it's going to be interesting to watch. There's a battle going on right now. Of course, the people in power, they want rates to remain low so the economy doesn't implode on their watch. But we've got this inflation, and the Fed is, I don't know what they're going to do to navigate this, but it's going to be interesting watching it. Keep an eye out for corrections, housing market, automobile prices. We've got an automobile price update coming up in just a couple days. Please make sure you are subscribed to this channel. Helps us out tremendously. Thanks, everybody, for being here. We'll talk to you very soon. Come back for more news, economic, financial news. See you soon. Bye for now.